Welcome to the Capital News. I'm your host, Alex Karitis. Today is Friday, August 28th, 2020. Thank you so much for joining me. This is going to be a weekly wrap-up segment. We're going to cover market performance. DNC, RNC conventions concluded. The three-ring circuses have come and gone, thank God. Did you get your money's worth? You're paying for it. We're going to talk about Thursday's data, initial and continuing jobless claims, Federal Reserve's balance sheet, money supply, and, of course, the Federal Reserve's new stance on inflation and unemployment. Because remember, the Federal Reserve has a dual mandate, one of full employment and one of stable prices. Okay? Market performance, the U.S. dollar is getting whacked. The dollar index is at 92.28. This is retesting a recent low that we saw a couple weeks ago. From a technical standpoint, I am watching what I think is a critical number of 88. That's the dollar index. This would take us to a two-year low going all the way back to 2018, early 2018. And if we go through that level of 88 on the dollar index, from a technical standpoint, I do not see much support, which means if it breaks through 88, it could end up continuing to the downside like a hot knife through butter. They are destroying the U.S. dollar. All central banks are destroying their currencies, make no mistake about it. This is a currency war. This is a race to the bottom. Nobody is going to win except perhaps those in the top 1% or the top 1% of 1%, because they hold the majority of financial assets. And if you have a weakening dollar, you could very likely see financial asset prices go up. Not the value, understand this, not the value, but the price. This is getting extremely, extremely dangerous. What we have been discussing here at the Capital News for well over a year and a half is really starting to come to fruition. And believe me, nobody wants to be more wrong than me because of what I see and what I explain to this audience on a near daily basis. It is not a pretty picture, but they keep doing the same thing, so what am I supposed to say? Am I supposed to believe that it's not going to happen? That inflation is not already here? That stagflation is not already here, because it is. Hyperinflation is being witnessed and experienced in countries around the world, especially the weakest links. It also will come to a theater near you in the not-too-distant future, especially if they keep the pedal to the metal, which they are, and they ain't going to take it off. You can go to thecapitalnews.com or on the YouTube channel at Capital News and look at our video segments. Look at our video segments, Capital Economics presentations. One from last July. Are central banks trapped? We laid all of this out, and it's coming to fruition. It has been in the process for the past year. Check out our yield curve analysis, also Capital Economics presentations. Again, you can find them on YouTube or our website, thecapitalnews.com. Do yourself a favor and learn something. Because what we stated in those presentations and what I have been discussing on subsequent podcasts is that when the bubble gets bigger and bigger, it becomes more and more fragile, which means it takes a smaller and smaller pinprick to burst it. And clear evidence of that is the federal funds rate against inflation, against recessions, and how that tracks over history. It's always lower. It's like a staircase. Lower interest rate, recession. Lower interest rates, recession. Once they start to raise them, it just takes a smaller amount of an increase to interest rates to burst ever-increasing bubbles. That's why the market had a hissy fit in the fourth quarter of 2018, because it couldn't tolerate 2.25%, 2.5%. 10 years prior, we're at 5%, 6%. We can't even tolerate 2.5. And remind you folks that, again, that was the end of 2018 when Donald Trump would have you believe that this was the greatest economy ever, which of course it's not, and it wasn't. It was a continuation of trend from the Obama administration, which, yes, was the longest expansion in U.S. business cycle history, but it was also the weakest. In the last couple of years, under the Trump administration, which turned it into the longest expansion, but a continuation of the weakest, came at the expense of trillion-dollar deficits. So it was at the cost of future growth and prosperity. That's not strong, folks. That's weak. It's a charade. It's smoke and mirrors. It's a continuation of what we have been doing for years, and we expect a different outcome. This time it's going to be much, much worse. All of the problems that are waiting in the shadows, waiting in the wings, are coming to a head over the next couple of months because moratoriums are going to be lifted. Bailout programs that had arbitrary dates, such as the airline bailout, comes to a conclusion at the end of September, and we discussed this the other day. Airlines are already coming out announcing after that deadline, where they are basically prohibited from laying off their employees, at least on an involuntary basis. They can do so voluntarily, which means they can offer their employees an early retirement package. Thousands of employees within the industry have already taken up those packages. And of course, who do you think financed those packages? We did. If they needed a bailout, they didn't have the money. So where did they get the money? From us. We're broke. The government's broke. Where'd they get the money? Oh, that's right. The Federal Reserve, the Banana Republic printing press. That's where they got it, and that's where they're going to get more. So is this an act right now by the airline industry to extort the government, which means you and me, the taxpayer, to give them more money? Because the excuse several months ago was this is not their fault. This is not their fault. So we have to bail them out. And it wasn't just this industry. It was pretty much every industry under the sun because it wasn't their fault. This was stated by members of Congress. This was stated by the Secretary of the Treasury. This was stated by economic advisors to the president. This was stated by the President of the United States himself. It wasn't their fault, so we got to give them your money. Well, what did they do with their money? Oh, that's right. They borrowed to the hilt at low interest rates, took their cash flows, what they actually generated through daily business operations, and instead of reinvesting it or saving it for a rainy day, they bought back their shares so they could artificially increase their share price so the executives could get paid massive bonuses because that's what their compensation is tied to. Then something happens. Something pricks the bubble. And all of a sudden, it's not their fault, and we got to bail them out. And don't forget, folks, through these emergency programs that were passed in the Nobody Cares Act, through the Special Purpose Vehicle, through the Federal Reserve, there is now an emergency facility that purchases corporate debt of the world's largest corporations. The largest. And we have hundreds of thousands, if not millions of Americans who are unemployed, who have filed for unemployment benefits and have not received a penny. But at the drop of a hat, it's not their fault, corporate America, for squandering their resources, financially engineering the market, their stock prices, and at the drop of a hat, we can bail them out with billions of dollars. But the people whose money it actually is are underfed, in line for hours at food banks, and haven't received unemployment insurance. And you think it's going to make a difference when you vote for either one of these two demented jokers, and you get your little sticker that says, I voted, in a couple of months. You got to be kidding me. You've got to be kidding me. With all of the rhetoric, with all of the actions. You want to say talk is cheap? Fine. You think it's funny? One guy says this, one guy says that. Fine. Put the rhetoric aside. What about the action? You going to overlook that? You're paying for it. Do you understand this? Your kids are paying for it. Your grandkids, your great-grandkids are paying for it. This is completely destructive, which is why I was against this from the outset, from the beginning. Representation and recourse, read that letter on thecapitalnews.com. Find that podcast on our YouTube channel, where I took the time to read it aloud. Take it as your own, send it to your congressman. This was before the Nobody Cares Act, because I knew something was coming. For these idiots in Congress and in the White House and in the Federal Reserve to justify the unjustifiable, and that's exactly what they're doing. And when we get to what the Federal Reserve's doing, it's just a continuation. It's just a continuation. The euro to the U.S. dollar is at $1.19. The Great British pound to the U.S. dollar is at $1.33. The Australian dollar to the dollar is at 73.5 cents. The New Zealand dollar to the U.S. dollar is at 67.5 cents. Again, folks, this is a deterioration. The U.S. dollar, which has the privilege of being the world's reserve currency, is coming to an end. We've wrecked it with a $27 trillion national debt, brought to you this year by a $4.2 trillion national deficit, and we still got a month to go. On the shares front, if you want to look at valuations again, you have the Fangman stocks, seven stocks that have eclipsed $7 trillion in their combined market cap. Okay? So again, if you're looking for a little bit of context, well, let's say what's GDP, right? The U.S. is number one. China's number two. If you look at the euro area as a block, they're number three. Then you have Japan at $5 trillion and Germany at 3.8. And you got Fangman, 7 companies with a market cap larger than Japan and almost larger than Japan and Germany combined during the Greatest Depression. Okay? This is because we are a banana republic. This is a printing press. It's not value, it's price. Valuations at record levels. Surpassing that of 1929, surpassing that of the dot-com era, surpassing that of the great financial crisis in other times in the past as well. This is completely unsustainable. It's a complete joke. It's a complete fraud. So many people are going to get wiped out because they're not going to see it coming. Because the president doesn't give a damn. He thinks this is the best thing. Stock market's going up. He thinks that's the economy. 10% of the population owns 90% of the financial assets. The top 1% owns the bulk of that. You get the picture? You understand the club? You ain't in it, but you're getting beat over the head with it every single day. Are you waking up yet? Or do you really think it's going to make a difference when you vote for these two jokers come November 3rd? Wake up! Crude oil, $42.97. Brent, $45 even. Natural gas, $2.65. Gold and silver had a good day today. Spot price of gold, $1,960 an ounce. Silver spot, $27.33. Uncle Sam's 10-year Treasury junk note, spot 7.3% on the rise. Initial jobless claims for the week ending August 22nd, 1,006,000. This is a decrease from the prior week ending August 15th of 98,000. Continuing claims for the week ending August 5th, again this lags a week, 14,535,000. A decrease from the week prior being the end of August 8th of 223,000. So a decrease on both, but still initial jobless claims for the week ending August 22nd, up over 1 million as we continue. And what is this, the 22nd week of claims at 1 million or above? I mean, we were at, 996,000 a few weeks ago, but the past two have been over 1 million. And we're told that this is a V-shaped recovery? I don't think so. Pandemic unemployment assistance for the week ending August 22nd, 607,806. This is an increase from the prior week of 82,820. Tallying it all up, and again, this lags by 2 weeks for the week ending August 8th, taking into consideration regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency unemployment compensation, extended benefits, state and additional benefits, work share comes to a total of 27,017,232. Let's round it to 27 million. This is a decrease from the prior week, which would have been August 1st, of 1,042,000. So this number is going down. That's the right direction, but we have so many distortionary effects because some of these programs have come to an end. PPP loans are still in existence. If you want those loans to turn into grants, the employers have to either keep employees on the payroll and not lay them off, or if they already did lay them off but got approved for a loan, have to call them back so that loan can be forgiven and turned into a grant. And of course, this coming from the government, any grant forgiven means it's an addition to the national debt. See how this works? Bailing ourselves out with our own money at the tune of, what was it, $80,000 per job? And it's more than that when you take everything, when you add it all up. That was being nice. That was just adding the $3 trillion up that we borrowed on a net basis through the second quarter of this year alone. 80,000. And we know most of these jobs, especially the first wave of them, were low-skilled, low-paying jobs. And a lot of these jobs, and we're going to see next week or next Friday, because that'll be the first week of September, we're going to get the jobs report for August, and we're going to see how many permanent job losses there are, in addition to everything else. But there you have it. Distortionary effects continue to cloud proper analysis of what's going on out there. Federal Reserve's balance sheet stands at $6.99 trillion, a decrease from the week prior of about $20 billion. But make no mistake about it, don't worry. Don't worry. M2 money stock increased by $40 billion. So there you have it. Resting at $18,449 billion. Oh yeah, these are record highs. Oh yeah. And look at a year-over-year graph. I mean, that'll make your head spin. But don't worry about it. There's no inflation. And in fact, the Federal Reserve's completely fine with inflation going higher. This is an article out of the Financial Times. We will focus more on this in the coming days and weeks. But this is a weekly wrap-up, and I still want to talk about some of the DNC, RNC. But again, this is an article out of Financial Times. Fed to tolerate higher inflation in policy shift. The Federal Reserve has adopted a new strategy for monetary policy that will be more tolerant of temporary increases in inflation, cementing expectations that the U.S. Central Bank will keep interest rates at ultra-low levels for years to come, something we have been stating here for months. Jay Powell, the Fed chair, announced the shift as he addressed the Jackson Hole Monetary Policy Symposium, which began in virtual format on Thursday. Because the economy is always evolving, the FOMC's strategy for achieving its goals, our policy framework, must adapt to meet the new challenges that arise, Mr. Powell said. They must adapt. The centerpiece of the Fed's new approach is the move to an average inflation target, which will allow it to overshoot the U.S. Central Bank's 2% target to compensate for persistently low inflation, which has been weighing on the U.S. and other economies in recent years. This is BS. Barack Obama would not have been the president if inflation was below 2%. Donald John Trump would not be the president if inflation was below 2%. This is all lies, and now they're going to tolerate it even higher, which they already say is basically non-existent, which is a lie to begin with. Following periods when inflation has been running low, below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Open-ended. They're not going to give us a hard date. Never going to do it for some time. And again, folks, this 2% figure that the central bank comes up with, the Federal Reserve and others, especially in industrialized economies, it's bogus. It's arbitrary. It's made up. 2%. Well, I think the people can tolerate 2%. That's all it is. It's the boiling frog analogy. Very slow and steady. You don't even know it's happening, and then boom, you're cooked. That's exactly what they've been doing for years. without any checks and balances, by the way, especially since 1971 when Nixon removed us from the gold standard completely, but that's another story. No checks and balances, completely unaccountable. Congress doesn't overrule them. The president doesn't overrule them. They're cheerleaders for these people. Print it. Give me that money. Trump wants negative rates. Give me a break. 2%. They make it up. And now they're going to tolerate even higher. Let's see how long you can tolerate higher inflation. Let's see. But the Fed chair said the central bank's acceptance of higher inflation did have limits. What limits? Are you going to explain? What are they? Mr. Powell said the overruns would be, quote, moderate and not extend over long periods of time. Again, very open-ended. If excessive inflationary pressures were to build or inflation expectations were to ratchet above levels consistent with our goal, which they still don't fully define, they just say above 2%, we would not hesitate to act. That's a bunch of malarkey. That's just not going to happen. They increase interest rates. That's it. It's game over at a very low rate. We couldn't tolerate again 2.25%, 2.5%. Fourth quarter 2018. How the hell are we going to tolerate 1% going forward? The Fed also adjusted its thinking on the labor market and the level of employment that can be maintained without leading to destabilizing consumer price increases. Too late. The Fed will now base its policy decision on, quote, assessments of the shortfalls of employment from its maximum level, end quote, rather than, quote, deviations from its maximum level. So it's going to be whatever they think it is. They're going to make stuff up. Mr. Powell said the subtle change reflects our view that a robust job market can be sustained without causing an outbreak of inflation. He added that going forward, employment can run at or above real-time estimates of its maximum level without causing concern, unless accompanied by signs of unwanted increases in inflation or the emergence of other risks that could impede the attainment of our goals. Remember, as I stated at the top of the podcast, Federal Reserve has a dual mandate. Full employment, stable prices. Stable prices, by definition, would mean zero inflation. You don't get more stable than that. Right? Very simple. Can we get a mathematician in here, an economist, a chemist? Very stable. Zero. Did not move. That's stable. But somehow it's got to be 2%. And now we're going to tolerate it even higher for some time. The Fed's new approach was formalized by an FOMC, Federal Open Market Committee statement on its longer-run strategy and goals. It could set the stage for the U.S. Central Bank to issue new, more detailed forward guidance on the necessary conditions for it to raise interest rates from their current level near zero. The Fed explicitly acknowledged the constraints posed by the current level of interest rates. Mr. Powell stressed that the Fed has less scope to support the economy during an economic downturn by simply cutting the federal funds rate. No, you know what, Sherlock? You're already at zero. How much lower are you going to go? You're going to take them negative? I think they will. They're already negative on a real basis, which is really what matters at the end of the day. But just wait till they're here nominally as well. On a subsequent panel at the Jackson Hole Symposium, Philip Lane, chief economist of the European Central Bank, the ECB, reiterated that it was prepared to inject more monetary stimulus if needed to ensure that inflation did not persistently undershoot its target of just under 2%. All of these jokers with their Banana Republic printing presses are just waiting on standby to print more and to continue their race to the bottom in this currency war, which is destroying purchasing power, lowering people's living standards. He said such a low inflation scenario would be costly in slowing the recovery from the pandemic and risky because a longer phase of even lower inflation might become entrenched and contribute to a downward drift in inflation expectations. Ladies and gentlemen, simple question. When you go to the grocery store, do you look for the most expensive items or do you look for items that are on sale? Do you take coupons with you or you just say, I want the most expensive everything and just take it to the cash register? Nobody goes shopping looking for higher prices. And of course, inflation is an increase in the monetary supply, but the effects of inflation are higher prices. Understand this. But they're talking about higher prices. The monetary inflation, the real inflation is already here. It's just a matter of time before it makes its way through the system. And of course, that too is already here, just not to the degree which it's going to be, and that'll come in the not too distant future. They think, these idiots and these central banks, they think we need inflation. Again, folks, the only institutions that call for and want inflation are central banks and federal governments, and that should tell you all you need to know. And perhaps corporations or even individuals who have mountain loads of debt, because they want to pay off that debt, they want to pay back that debt with extremely weaker currency. And that's exactly what's going on here. In practice, the Fed under Mr. Powell has already moved away from the inflation-fighting mantra that characterized its policies in previous decades, most notably under the chairmanship of Paul Volcker. But crystallizing that change has taken on added importance after the U.S. was hit by the pandemic. The median forecast of Fed officials does not predict an interest rate increase until after 2022 at the earliest. I imagine it'll be longer than that unless the market has its way with us before then, and it very well may. Mr. Powell has previously said the Fed was not thinking about tightening policy. This largely just codifies the extremely dovish policy strategy the Fed has already been following. Fed officials have been very concerned about the severe damage to the labor market and the desire to swiftly return the unemployment rate back to its pre-COVID level. This is going to take years, ladies and gentlemen, if it ever gets back to that level. The Fed also reframed its views on the maximum employment, stating that the goal is now a broad-based and inclusive one, highlighting the central bank's heightened sensitivity to economic inequality in the U.S., the same economic inequality that they are causing through their policies, but they will not admit it. This is going to cause even more income inequality. This is going to devastate the prospects and opportunities for minorities, disproportionate to whites. Make no mistake about it. Make no mistake about it, because the cost of living is going to rise significantly, and that has a larger impact on the poor and lower income households. Unbelievable what these idiots are doing, and nobody calls them out. Like I told you 2 weeks ago, last week before the Democratic circus came to town, I said they're not going to say stuff about this, and neither are the Republicans, and neither of them did. Because these idiots in the central banks are bailing out the other idiots in the Congress and in the White House. This change reflects our appreciation for the benefits of a strong labor market, particularly for many in low and moderate income communities, Mr. Powell said in his speech. He highlighted the gains achieved prior to the coronavirus outbreak, in which Black and Hispanic unemployment rates fell to record lows. The robust job market was delivering life-changing gains for many individuals, families, and communities, particularly at the lower end of the income spectrum. Oh my goodness. These people, these central bankers, really starting with Alan Greenspan, they all need to be in prison. Greenspan, Bernanke, Yellen, Powell, and all the other lackeys that sit around the big table and come up with numbers out of their you-know-what, all need to be held accountable for economic crimes against humanity. Because that's exactly what this is. This is supposed to be a system here in the United States, at least. I can't speak for other countries. That's their business. But I'm an American. And we are supposed to take our marching orders from the Constitution of the United States of America. That is a document that is based off of checks and balances of our three branches of government. There is nobody who really oversees or overrules the Federal Reserve. I don't care if they get paraded up there before Congress. I don't care if the president appoints some of the members of the board. I don't care. Where's the oversight? We're saying, no, you can't do this. You can't do that. That doesn't make sense. And even if they do say that, the Fed doesn't give a damn. They're going to do it anyway. It does not check off any of the boxes that would be fitting with our Constitution or even with free market capitalism, because they are setting the cost of capital. They are distorting markets. Markets are supposed to find their own equilibrium with as few distortions as possible. That's when they work the best. There are no markets. There's the Federal Reserve. There's the ECB. There's the Bank of Japan. There are no markets. This is a mirage. This is a smoke screen. It's truly pathetic. It's truly pathetic. And we have people protesting and marching on Washington today to commemorate an anniversary of Dr. Martin Luther King Jr.'s I Have a Dream speech in Washington, D.C., on the National Mall, and of course on the steps of the Lincoln Memorial where that speech took place. And of course, all of these people are a stone's throw away from the Federal Reserve, as they were a couple months ago when everybody was protesting George Floyd's death. Federal Reserve's right there. Can't miss it. People aren't protesting them. They need to be. They need to be called out. Why can't any of these reporters, when they have their Q&A session with Jerome Powell, why can't they just ask them, if your dual mandate, if one of them is stable prices, then how do you justify higher inflation than zero? Zero. How do you, isn't zero more stable than 1%? Isn't zero more stable than 2%? And now you're going even higher. How do you justify this? Isn't inflation stealing purchasing power? So how does that help lower income households who have to spend disproportionately more of their income on the basic necessities of food, of utilities, of housing, as compared to those in the middle income brackets and especially those in the upper echelons of the income bracket? These are basic questions he's never asked. And even if he was asked, he'd probably just him and haw, and then he'd give some BS statement and move on. And of course, when he's marched up before Congress, he's praised. Thank you for saving our butts so we don't have to go back to our constituents and tell them the truth. Thank you. The president calls Jay Powell the most improved player. Thank you. I don't know how much more you need to see, folks. I really don't. But getting to the DNC and the RNC, the circus is in town now, gone, thank goodness, as far as I'm concerned. Did you get your money's worth? Did you like the monkeys? Did you like the elephants, the clowns? Tell me about it. Here's an interesting question I have to pose my Republican and conservative and Trump supporters. Because the Trump administration, the Trump campaign, and his supporters are calling what's going on in the United States with respect to the protests and the riots, quote unquote, Biden's America, right? Let's just reverse this. Let's just reverse this. Let's assume, for the sake of argument, that Joe Biden was the current president of the United States and Donald Trump was running against him. Now, if you have these protests and riots happening in the streets under a Joe Biden presidency, and Joe Biden comes out and he says, look, folks, if Donald Trump gets elected, this is Trump's America. Would you buy it? My Republican conservative friends, my supporters of Donald Trump? Would you buy that argument? That the protests and riots occurring under a Biden administration, a Biden presidency, would be Donald Trump's fault? A candidate for president, in my hypothetical? You'd say that's wacky. You'd say that's loony. You say that doesn't make any sense. So how many of you are buying the president and his campaign's argument that what's going on in the streets is Biden's America? Raise your hands, because I know many of you do. Yet if you reversed it like I just did, you'd probably still blame Joe Biden. And that would be the right thing to do, because he would be the one at the helm. The buck stops with you. Isn't that what we're told? Isn't that what we're led to believe? But no. The argument is this is Joe Biden's America. And understand, folks, it makes no difference. This was coming to a head. Social decay, economic decay, political decay. It's all coming to a head. Generations of flawed policies. The stuff we just talked about, all coming to a head. This is global. And all of this was falling apart before the pandemic. We know this because that's what the Kapital News is all about. That's what we have been discussing since February of last year when this podcast came online. We know because we look under the headlines, we look under the hood. We know how to assess the economy. We know what to look for. This was not the greatest economy ever. Wasn't even good, to be perfectly honest with you. It was smoke and mirrors, folks. That, to me, is not good. If you want to say that that's good, be my guest. But it isn't. I want a house built on a solid foundation, not one built on sand. That's what we had. That's what we continue to do. Again, at the expense of trillion-dollar deficits before COVID-19. Stealing and robbing future prosperity so we can congratulate and pat ourselves on the back today, only to pay it back in the future with interest. And there is no growth because we stole all of it. And we got to pay it back plus interest, which we don't have. So we're going to have to print it. Like the banana republic that we are. That's the weekly wrap-up. We covered a lot, as we normally do. It's a crazy week. They're only going to get crazier as we move forward. But this is a complete travesty, what the Federal Reserve has done, continues to do. It's a complete travesty of what the Congress is doing and what the White House is doing in conjunction. I weep for my country, but I'm going to fight for it as well. Enjoy your weekend. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.